Garment factories in Lesotho are cutting production and jobs after losing preferential access to the US market. Factory managers say orders fell sharply after US tariffs were imposed and duty-free access under the African Growth and Opportunity Act ended. One factory operating for more than a decade says it previously produced about 500,000 garments a month, mainly for export to the US and South Africa. That figure has since dropped to around 100,000, with the company laying off more than 1,000 workers.
Some of the factories have got to go what they call short time. 1,000 will work for 2 weeks. The other another 1,000 will work another 2 weeks. That now means they are getting a reduced pay, which is already very, very, very small.
The US later reduced the tariff rate from the initial 50% to 15%, but the expiry of their AGOA means exports now face additional duties. Officials say combined tariffs on some products exceeded 40%.
It is very important for us to have the import and export production, because it really helps us to have the job. So if we don't have the exports, then it is very difficult for us to continue or run the factory. It really affects our production, and not only our production but even the economic of the country.
At another factory, managers say suppliers have suspended fabric deliveries for US-bound orders, forcing about 200 workers to stay home.
Because we no longer have orders due to those high rates of tariffs. There are no orders. So those raises in the tariffs has really affected us economically and socially.
Textiles are Lesotho's largest export sector and employer. Industry officials say the impact of the tariffs is expected to continue in the months ahead. Ian Kinyo, CGTN.